Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How we doing out there? Sorry for the delay, but the only time I ever will cancel calls or take a break from the emails or anything is when a client passes away. And this will serve as your friendly reminder that you should always have beneficiaries, backup beneficiaries, or if you have an individual account or a taxable brokerage account, it's called a transfer on death beneficiary. You should always have that set up. No questions asked. It takes 2 minutes to go into your 401k, your individual account, and usually I make a big deal out of it in February, but check it out. People get divorced, people pass away, people change their mind on who they want their beneficiaries to be, and some people never put beneficiaries down, and that can make it a nightmare. So just take a second. You never know what might happen, and it's definitely worthwhile to do that. So sorry for the delay. But we're here, and we're going to talk about the stock market here today. I didn't even change my shirt. See this? This is my workout shirt, by the way. I was working out earlier, and this is my workout shirt. Cody didn't even say anything. His eyes just went, what? He knows that ain't the truth. Hey, anyways, let's take a look at the stock market today because we got a pullback. I love it. I always get excited during pullbacks. And I'm actually going to start with the NASDAQ. The NASDAQ is now nearing about 6%. Actually, I think it's over 6% off of the highs. So a decent little pullback in the work today. Almost 3% of that coming just today. Show you how kind of negative it was today. Still second place year to date. The S&P is first place there, but it's very close now to taking third place as the Russell actually holding up a little bit better than the rest of the markets today. It's the biggest loser over the last 30 days, by the way, the NASDAQ being hit. And why is that? Well, lately anyways, it's because rates are going higher, 1.34% I think today or something like that. So a sharp move in rates, that hurts the tech stocks, in particular the big cap tech stocks there. 1.53% on the 10-year, and here's a quick look at that. Sharp move to the downside, which means rates are moving higher if you're not familiar with that. Growth stocks as a whole were the weakness today. So in other words, if you're looking around, and you obviously a lot of things were red, but you're looking over to the growth side of things, small cap growth, large cap growth, mid cap growth, all the weakest on the day. And if you're looking inside the NASDAQ, I'll just briefly mention that it was the semiconductor stocks that took the brunt of it today. Applied Materials, really choppy in general, but today a pretty bad day for that one, down 7%. You got AMD, a more familiar stock here, down 6% on the day. These are big moves now for the semiconductors. 5%, over 5% on Xilinx, and I'm looking in the NASDAQ. KLA 10 Core, also a sharp pullback. Really, if you're looking at the top losers in the NASDAQ today, you're likely going to see the semis there. Only a handful of stocks in the NASDAQ were positive today. Activision was the biggest gainer, up 1.6% there. They settled their company sexual harassment lawsuit that's kind of been ongoing here. Settlement comes in at $18 million. It's not so much that we're celebrating the fact that they paid $18 million to settle an unfortunate series of events. It's because we now have a number to attribute to it. That's the way it always works. Whenever there's some country suing Alphabet or something happens like this, we want to know the number. Right? Take the emotion out of it, or whether you think they're now bad people or whatever. It's the number. We know $18 million isn't going to hurt them as bad, right? Not a big deal for these guys. And so now the thought is we can start putting that behind us. It's not going to affect earnings too much. You got legal fees and stuff in there as well. And so that's what you have going on there. EA Sports also recovering a little bit here, it likely in sympathy with Activision Blizzard. And so that's really what you have going on in the NASDAQ. I mentioned the Russell because the Russell's been kind of holding up. It hasn't been exciting, but it's still third place year to date there. It's been the best over the last 30 days in terms of performance, going from lows to highs and basically back to the middle again there. Still down about 2% over the last month, so you're getting a little bit of a pullback there. Small cap growth is the issue, as it has been all year long. There's this argument between small value and growth, right? And that's because small cap value and mid cap value stocks are just trouncing, if that's a word that I remember, the rest of them, meaning your index, your growth stocks. And I'll show you real quick how you can kind of take a look here. What we have on the chart in the orange, you're looking at small cap value, Russell 2000 value stocks. On the bottom, you have Russell 2000 growth stocks, and our date is year to date. Right in the middle, you have the index, or some people call them core. So a lot of times on TV, you'll see them say value, core, and growth. Well, it's real easy to see that obviously value stocks are outpacing growth stocks by about 20% year to date, and that's why you see that argument. Yeah, you got about 3.8% there, 22% on the value stocks, and so that's the argument that people are making now. Is this the time for value stocks to shine? Is this the time that it's going to happen there? And so that's what we're looking at. Now, if you look further out, any long-term period, the growth stocks always beat value stocks. There are many, many instances where over a 12-month period, value stocks can shine a little bit better than growth stocks, but it's never a long-term thing. Growth stocks are definitely the better returner in the long run there, so something to think about if you're going to fall for the value play at the moment. Being a value investor is highly rewarding, but very difficult. Anyways, some of the off-the-headline things you may see, or probably won't see, in the Russell 2000. GoGo, in-flight internet. Remember when GoGo was the big deal there, all over on the airplanes and stuff? Well, 37% gain on the day for GoGo there. Pretty impressive there. You got a lot of action going on inside the stock as far as analysts taking their position. You got a lot of large option trades there. They're just positive in the long term, right? They had a big loss here, obviously, during coming out of the pandemic, or the latter part of it. And so a lot of positive comments about the future there. Stock getting a huge boost there. I didn't see too much in particular when I was looking, but that is the gist of it for that one. And it's one of those names you normally don't see. It's not Tesla, so people don't talk about it. It's not Microsoft, so it doesn't get mentioned on TV as much, but a huge move for the day. United Foods here. Earnings came in better than expected and super positive, raising their guidance going forward. So the stock 23% higher there. That's one that gets a little bit of attention. You got Malibu Boats, one of the better performers today. Not as exciting as the other two, but 1.5% higher on the day. And that's kind of in sympathy to Winnebago. Winnebago had a great day, actually, up 6.5%. Why would a boat company be the same or be performing in sympathy with an RV company? It's actually not due to the reopening economy sort of thing. Winnebago owns boats as well. They bought, it's not so popular down here, so I can't think of the name. Barometer? I could probably find it. Pontoon boats. They bought pontoon boats, but I can't remember the brand. So they, Barletta, there you go. So if y'all are lake people and do that, Winnebago owns Barletta. And so when you have that sort of response to Winnebago, well, people go look at other boat companies as well. And so Malibu Boats did all right there. All right, if we take a look at the S&P here for the day, still first place year to date, but today dragged down by large cap tech. Was the weakest sector, by the way. Microsoft, very weak day on that one, 3.6%. That's a big move for Microsoft if you're familiar with looking at it. Apple down 2.3%. Amazon, these are your big names that have a lot of weight in the index. So when they have a bad day as a whole, that's going to bring the markets down. There's no ifs, ands, or buts about it. And Alphabet breaking the 50-day moving average there. There was only about 85 stocks in the S&P today that were positive. Mostly were news-driven moves. It wasn't like there was a sector in particular that stood out or something. It was just news-driven moves there. And you now have only about 33%, one-third, of the S&P 500 above the 50-day moving average. And I keep bringing that up because that's where we're at, right? We're at that point. Here's that blue line. We talked about this yesterday, blue line, 50-day moving average. We're at that delicate point yesterday, right? Remember where the glass isn't half full, it's not half empty. So it's a very delicate point. It's very easy to get people to become very bullish or very bearish because we don't know. We all see it a little bit differently when you're at the halfway mark. So I won't review that again, but that's how you get these kind of big moves is when you're stuck at those halfway points. Traders love that sort of thing for the short-term trading. Also, that puts the S&P, about 5% off of highs, two of that coming from today, so you know the weakness was there. And hopefully it's the beginnings of more pullbacks. The NASDAQ, by the way, broke the prior low, so more weakness there. You see the comparison? You got the S&P not below the prior low, so a chance for a higher low there. And the Dow, which was surprisingly weak early on, is holding up as well. So the NASDAQ stands out as that really, really weak spot. Speaking of the Dow, we have Cody back for Guess the Dow, I believe. And let's see what we've got. I don't know where we at.
I am back today. Your leaderboard, we got Matthew, Chris, Brian, Ashish, and Chelsea. Those are your top 5 for Tuesday. Remember, if you want to play, get your guesses in by Saturday at noon. Jazzwealth.com/guess the Dow.
I tell you what, that Ashish, a good guy right there. That's good. Young kid. He's a young one, but good guy. Up in Florida, by the way. Yeah, shout out to him. All right. That's cool. And do you get a haircut?
I did over the weekend. Yep, I was very cautious not to get too much taken off. So I didn't say a word. You got stuck in a conversation.
Yeah.
And, I didn't say a word. I made sure too much wasn't coming off.
Wow. I didn't actually notice until I looked at the screen here. I'm like, he's got a little less hair there.
Yep.
Wow. Well, looks better than mine. I'm talking to that lady, and I started talking to the lady cutting my hair, and I said a little bit, just a little bit. And I'm bald. Basically, like I'm going into the service, man. Anyways, I'm not upset. Play Guess the Dow. If you'd like to play Guess the Dow, you know where to go, jazzwealth.com/guess the Dow, and have some fun while you're at it. All right, sector breakdown here for the day. I don't have much, actually. Crude oil breaking the 5-day win streak. So up 1, 2, 3, 4, 5 days. We hit new highs just for a second, and it reversed course. Totally cool, no problems there, but oil is basically heading higher. You get the gist of it, right? You get what Washington's trying to do, and so oil traders have figured this out. There's no hope for oil. It's going higher. That's basically the position everybody's taken there. I'll pop over here because that's not what we want to do. We want to go to this page here. It's up over 100% off lows, by the way. If you're looking, I mean, it's not like, don't feel bad for oil unless you have to buy it. But other than that, it's up nicely. A little pullback today, not a real big deal. Let's take a look somewhere interesting here. There you go. PEJ, an ETF that focuses on leisure stocks, right? We'll just say reopening, right? If you look at the reopening stocks here, very extended. This ETF, very extended in the short term, is 3.56 standard deviations away from its 50-day. The all-time record is 4.06, which was set over here. And then over the next 30 days, it fell 6%. A little bit more if you go further. But this area of the market, hospitality, leisure, and such, that's the ETF that people use. I'm just pointing that out if you like that sort of thing. It's very extended here in the short term, so I wanted to give you a little bit of a warning as far as how having this extended. But remember, how do ETFs work? They're just a basket of stocks. So there must be some stocks that are causing this ETF to become very extended in the short term. Well, which ones are they? So maybe we know to avoid them for the time being, or look for pullbacks that you might be interested in. So I put together a little list for you. I won't take much of your time. Let's just go over and look. Here are the most overbought reopening stocks in the PEJ, if you're looking at that ETF, and they are sorted by how extended they are from their 50-day moving average. Oh, cute. So we put them in order this way. We also included their 5-day performance, not including today, so you could take a look at how they have been performing. For example, Norwegian Cruise Lines, the bulk of the excitement has happened in the last 5 days. Year-to-date performance is only 10%. So I like to put these things together so you can say, well, it's up 10% in 5 days. Year-to-date, it's up 10%. So there's been a lot of magic in the last couple of days. So we have that. In order, you've got Royal Caribbean and Norwegian Cruise Lines. The cruise lines have been gobbled up lately. They're very extended from their 50-day moving average over the last 5 days. What would that look like? Now, if you look at RCL, there's your ticker symbol. That's how you see it. Very extended in the last 5 days. Look at the sort of topping tail action in here where the buyers wanted to continue pushing it higher and were unsuccessful. Very extended. Let it be extended. Walk away. Enjoy yourself with something else and then come back to it. The point being, this is one of those ETFs that caused such a caused this move here and to be extended from the 50-day. You can see that on my charts because I always color them in blue. Looking down the list, you've got MGM 10% and Marriott, the only other two that are more than 10% away from their 50-day moving average. And then you go start moving through the airlines. So very quickly, with just this one chart, you could say cruise lines are extended, hotels are extended, but airlines are not as extended. That's a overly, like how you teach a child, right? If you're looking at this list, I don't want to be looking at these at the moment. I might consider taking some profits if you're a short-term trader. And for opportunity, I might look at these first as they or if they pull back. So in other words, United Airlines only 5% away from the 50-day, likely a lot closer after today. You look at this guy here, you say, okay, it just had a little bit of a burst coming out of a downtrend. Maybe when it pulls back, if it settles and shows some kind of, hopefully a pullback with oil, that'd be great. Maybe I'm interested in it. I'm not so interested at the same time as RCL. That's going to need more time. It's going to either need to move sideways or pull back. And so that's really what I was trying to kind of highlight there for you, if that's something that moves the needle for you. Hope you like it. All right, new highs and lows. 18 new highs, 5 new lows on the day. You got FedEx making new lows. Not good for me. I have a FedEx position. It's down. It's got to be down, right? It's got to be down a little bit. Yeah, we're down on FedEx now. Don't try to make it seem like I always do everything right. 220 puts had a little bit of a rough day as they pull back there, but I'm not worried. Got plenty of room there still. And obviously, we're very, very extended on FedEx. Market falls, FedEx falls. I'm totally cool with that. Also, just to throw it out, I don't know if you guys like this sort of thing. I had a Mondelez today. Sold to 57.50. Oh, I got one. All right. Oh yeah, no, I only got one. Yay. All right, I sold one 57.50 put, and the rest did not get filled. And so we'll make sure that's canceled. Anyways, I just like the idea in the short term that this was extended, went a little bit below. There was no magic or science behind this one today. I was just looking for stocks that pulled back, and it was either that or Adobe. And I was like, let's think about Adobe. $578 a share, or Mondelez, right? A lot cheaper here, $57.50 a share, if that's where it's going to be at. I just like that a little bit better. And I didn't have time to do a whole lot. Obviously, I didn't have time to watch the order, and so I'll follow it, I guess, just because we're here. But I have one, so if that makes you feel good, I got one of them. All right, so that's that. Again, we're not short-term traders. I'm not telling you what to do. I'm just sharing with you what I've done, and we'll see what happens there. Why not? We put all this information together every day. Okay, a couple others here. You got Newmont hit new lows and immediately reversed. Good sharp reversal there on Newmont. Did that without gold. Did that without any real help from the underlying commodity. It just bounced. People said, that's it. Hit 52-week lows, I'm in, right? I don't know where that goes from there. Just one I thought I'd bring to your attention. Cabot Oil, we talked about this yesterday, very extended. It actually gapped up today. Day trader's dream is when you have an overly extended stock and then it gaps higher. That's where people look. And so the day traders had fun with their shorts there. All that to say, look, it's extended, right? If you own it and you didn't take profits, what else do you want? Oracle looked like it was going to break out today. I actually give this one a little credit. So it's on the list because it attempted to break out and likely would have done well, but the market was so weak today. Tech stocks in general, so weak. So if this one holds in this area, it may be trying to tell you something, that it's stronger than the market. Today, obviously, it's stronger than the market. But I think on any other day, where if being at this 50% area here, if we would have had some good news about Washington and all this great stuff, then maybe we would have been just as strong to the upside. I think Oracle would have been able to play along strong with that. But we got what we got today. I just think it's a worthwhile watch list item. Nope. There we go. Schwab also hit new highs. It loses a point because, remember, it extends itself to break out. Don't like that as much. It may be one to watch as a pullback, and you've got to be thinking at this point, so rates have sharply risen. That's good for banks. It's good for brokerage firms. They're not going to continue to sharply rise. They're going to take a break. When they take a break and bounce, Charles Schwab will pull back. But do you think that that's the end of rates rising forever? No. So it means that it'll likely take a break, then rates start moving higher again. If that's the case, Charles Schwab takes a break, then starts moving higher again. So it's just a watch list item, and that's really all we do this section for, is just really to give you thoughts and ideas of where you might look, or if you're building a watch list, things that you can maybe consider looking at. All right, we'll go to the news here, and then I'll get out of your way or ask questions, or you can ask questions if you have questions. If you don't have questions, it's all right too. Boeing in the news today got an Air Force and Navy contract, lots of billions of dollars, I believe 4, if I'm remembering right there. Stock still lower on the day. Ford, you have to now tell, if you work there, you've got you have to tell them your vaccination status. It doesn't appear that they're making you get the vaccine. They just said we just want to know if you got the vaccine or not. Which I think that's one step away from, hey, since you don't have it, you should get it. But that's political. They also, more financially related, going to spend billions. They're going to spend $11.4 billion building electric vehicle production plants here in the U.S. I mean, it's good news that they're building plants and stuff, but is that going to work? That's a lot of money. So the stock was higher by 1% on the day on that handful of news, I guess. MasterCard. This just goes to show, by the way. I was in Knoxville over the weekend, and it was more of like a college area, and all the girls were wearing those hats that wrap around. I forget. You know what the name of those are? Cody?
The hats that wrap
It's just like a cowboy hat, but it's flat around. They're all wearing that because that's what's popular. It's like Instagram and all that great stuff. Okay, they're following. The herd following the herd, so to speak. That's what's happening here with MasterCard. MasterCard down today because now they're getting into the buy now, pay later sort of thing, right? It was only a big deal because PayPal bought Affirm, and then everybody said, PayPal's killing it. We must have to do something like this as well. Why? Right? I don't understand that. We've gone over that in the class here that most of those people are actually behind on their payments. It's more headache than it really comes out to be. Affirm, I believe, was the ones that said that. But they're just following along. So they're going to build their own installment plan option through the card. I don't know. I just reporting the news to you here. That one's a little bit weird to me. Microsoft, of course, lower on the day. LinkedIn is trying to do paid events on the platform there. That's clever. I mean, that's probably not why the stock was down today, but that was in the news. Huntsman, there is a activist fund called Starboard. Is it Starboard that did this? Yeah, Starboard did this one. They now have 8%, just over 8% of the company, and I love the way they worded it. They said, we're going to engage with the company to unlock value, which is just a fancy way of saying they want them to raise their dividend. They do good with dividends. They consistently raise their dividends and have done so, and I guess they're going to look for either maybe a one-time dividend or maybe raise the dividend for a while, and we'll see. That's that one. And that's basically all I have for stocks in the news. I would point out Interactive Brokers down just a little bit, still trying to come out of the downtrend here. Very interesting, and Cody will know what this is because we watched it on the day that this happened, and we were both like, I don't know. So Interactive Brokers has to pay $1.75 million to the Commodities and Futures Trading Commission because the day that oil went negative, their software didn't know what to do. It didn't know how to account for margin on a negative position. So I think they lost like $88 million or something. They had to pay back clients it's fair. They didn't try to hide it or anything. They just said, yeah, we didn't really ever expect that to happen. There will likely be more of those from other brokerage firms that allow futures trading as well. I think TD Ameritrade already settled theirs, but if you remember last year, May or March or something, that was quite fascinating. We were in the middle of actually making a video, and I'm like, it's negative. As fast as it happened, I'm like, I'm not sure that's supposed to happen. Oh, anyways, that was cool. Well, cool to see. Once is enough, though. Yeah. I know. Yeah. Right, crazy? You got all of them doing that. Affirm, the Afterpay, that's what kicked it off. I said it wrong, I think. Square getting Afterpay. And everybody goes, oh, I guess that's what we got to do, right? I think, anyways. It feels like following the herd sort of mentality. I don't care much for that. But if there's money there, they must see something. Yeah. So, what do we have? We have bonds oversold to the downside price-wise. Rates are higher, overbought to the upside. We've got the market selling off on a day where now you get people more excited to say, well, maybe there's a little bit more. Whereas every one of these pullbacks, people said, well, just pull back a little bit and I'm a buyer. Okay, this time now is different. Now you have people that said, that pulled back more than I thought. I bought along the way and I'm back to break even only to get smacked in the face again. Now you have people that have been sitting on the sidelines going, that looks a little bit worse. I'm going to hold out for down here. Or, you get greedy and you go, I'm going to wait and see if it falls further. Now the buyers start to dry up a little bit, not because anything's bad or wrong. We got a very volatile news type week with the government and the new taxes and debt ceiling and shutdown and all that stuff. All right, that's going to be what it's going to be. But now you have people saying, I think I'll hold out and wait just a minute, right? And that might be what you need to see there. Who knows? Yeah. No, so Chris, I'm not saying, I was saying that happened. Oil or any commodity is not currently negative, but last year oil went down to zero, and we watched it go to zero, and then it went negative $1, negative $3, $5. It went down to like negative $34. And for a moment, you had to kind of process, now you're getting paid to take risk. It's like negative rates in Portugal or whatever. Now you're actually getting credited back for taking on risk or debt in that case. It was fascinating to watch. Yeah. Oh, yeah. You want to buy a house? And if only there were a way to buy a house and pay for it later, right? Shucks, man. Yeah. Especially like that, right? Where it's just, oh, I just click and I buy something, and then if I don't pay it back, they can't do anything. That's a tough one. Yeah. Well, that could be the case too, Andrew. Yeah, we've seen that over and over again. The reason I don't think that's the case this time is because now you have the technical traders that like to follow this. They have everything they need to believe there's a pullback. So they're not going to be ones that just start buying right now. There's no technical pattern that says, yep, now's the time to buy aggressively. And then you have the normal everyday people that just kind of like watching the markets and, add into their investments and stuff. They see what's happened over the last couple weeks, and it's going to be reported as more negative than positive. Sentiment changes slightly. And so people say, well, then I won't dollar cost average in unless we fall a little bit further. So they're buyers, they're just not buyers here. That makes it a tough spot. Makes it a tough spot for here. All right. Well, I apologize for being just a little bit late today. That will not happen tomorrow. I will remind you one more time. You want to check your beneficiaries. Add them. Add backup beneficiaries. Put 5 or 6 people on there after your primary beneficiary, just in case. You never know. The things I see every day, it's got to make you think, okay, this takes me a minute, saves a family member a whole heck of a lot of time, hassle, and a headache when they shouldn't be focused on that. All right, enjoy the rest of your day. We'll be back tomorrow to do it all over again. Thank you for hanging out with us, and adios.